Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts. Today is June 5th, 2026. It's about 9:30 p.m. Eastern Standard Time here in the USA. Welcome everyone. This is a trading and investing YouTube Charts channel and video. Next week, we have a few earnings releases for stocks, companies such as Campbell's, Chewy, Oracle, and Adobe. USA economic data is important. We have data from CPI, it's the inflation data, consumer price index, PPI, producer price index, unemployment claims, as well as OPEC JMMC meeting early in that week. Recent news. Today, the surprise May jobs report of the 172,000 jobs increase, that greatly changed the odds of an interest rate hike in the USA for 2026. That's mostly the reason the stock market sold off today. The volatility in both stocks and cryptos related to AI, valuations, and global macro uncertainty. There were bearish technical chart patterns as well. Other reasons, Broadcom AI guidance from their earnings missed. And so the chip sector, semiconductor chips began to sell off as well. Alphabet raised $84 billion for AI capital expenditure and build out. Last week, NVIDIA unveiled their new PC chip at Computex conference, all their AI partners, and also showed their completed hardware and upcoming roadmap. Agentic AI agents are starting to roll out with companies, software products, hardware and software as well. SpaceX IPO is reportedly going to list on June 12th, 2026. Let's get into the charts. SPY, S&P 500 ETF, big sell-off today. Why? Resistance rejection. 760 was our resistance. The support line, 752, and then we broke down below that. Were there warning signs? There were. Last week I was saying it's not quite here yet. Obviously, we're seeing the realization of the sell-off, but on the monthly chart, there was a bearish divergence setup with the RSI. On a weekly chart, it was overbought on both RSI and stochastic RSI. On a daily chart, we rejected down from that 760 resistance, which I highlighted in blue. And if we look at the RSI, we had this bearish momentum. Stochastic RSI as well. Squeeze and MACD histogram, all four of those indicators telling me there was a loss of momentum. If we use other indicators, pivot point obviously got rejected down from that 760 level. That's critically important. And then where's the next downside target? The next support level down. On a 4-hour, we hit support 1. What I'll say, I don't want to sound too bullish here, but on the hourly and the 4-hour, we did hit oversold. We could still keep crashing. Now, the big question is, what's going to happen next? If it's going to be typical trading, there could be an intraday small bounce, maybe retest this 742 before bears try to attack again. So I was talking with a colleague earlier today. Is this the top of the market? It might not be the absolute top, but it does remind me of 2021 setup in terms of only the RSI, where on a daily chart, let's go to a weekly chart, where we had that overbought condition way back in 2021 and 2024 happened again. But on a monthly chart, specifically monthly chart, we're seeing the bearish momentum and we're at the top of the market. Back in 2021, before inflation problem, this setup also happened. So that's why if it's going to be real, if this is the real top of the market, it will take us 1 year to go down. So that's something I just need to be aware of, because there's a lot of what I like to call writing on the wall. The emotions are high. AI stock prices, it's the highest of all time. Valuations are high. AI is everywhere in our life right now. Software and hardware. Stocks is all about AI. Those stocks went up hundreds of percent. Bitcoin is in a downtrend, it's crashing. Then I see a technical setup like this. That's why for me, I sold all my crypto, I sold all my stocks. I've just been day trading a little bit. I found that works for me in terms of not getting too overexposed or too over leveraged during market turnaround spots, because that was a problem for me years ago. Sometimes still a problem where it looks like it could keep extending, or it looks like it keep crashing, but it's actually the bottom or the top. So that's why for me, I was playing this very trying to play it very carefully. Another way to think about this is Fibonacci levels. Where's the next level down? 729. Next level down, 711. Next level down, 695, 679. Just keep it simple. NASDAQ, I was saying a couple days ago, we hit that resistance of 747. There was actually a head and shoulders on the 4 hour. Also see it on the 1 hour. The 4 hour is a little easier. Sometimes that's why I like to use line charts sometimes. Candles can really mess me up and meaning affect my mentality, because sometimes if I get a hammer on a hourly like this, there's a bunch of hammers on the hourly. So yes, we did double bottom in that post-market setup. But in the longer term, if I actually just turn off the candles, go to a line chart, I can see my technical patterns better. Head and shoulders, that's bearish. We went down way more than the target, 2.5 times the target down on AI. Crash. Interesting that the daily Bollinger Band, if it's going to be extreme second deviation out of that normal range, would be somewhere in the 688 price range. Linear regression as well. So this is my target. Somewhere here could be the bounce spot, 690, with the reversion, because what will happen is if everyone tries to short this thing down and a big institution or hedge fund closes, it could bounce back up to about 715. So it could be this lower low, lower high attempt, and then one more lower low. That would actually create the daily head and shoulders. So I'm watching for that setup. So I'm not going to get too extreme in any one direction just yet. Dow Jones had a nice little time with the rally, but we did hit that resistance on a weekly chart, shooting star. There's some danger here in the investment chart. If that's true, Dow theory, we could retrace all the way down to 479 in 6 months. It's possible. If this is really the top, it could take us down like that. Couple months. So watching out for that. IWM, it's a very similar setup. Shooting star on this weekly. Daily chart was resistance below 292 in this area. So watching out for that. Oil. Oil on the weekly, it's kind of choppy looking, but if we use some Fibonacci, get some supportive resistance, we bounce right off that 236 level. So we're still in the uptrend. As far as the super trend, if I use a 2 ATR super trend, the stop loss is 119. So until we close below 119, we're actually technically still in an uptrend, even though it's consolidating to the side. That's the big line down there. Natural gas, try to UNG, try to have an uptrend reversal. It's, to me, it's kind of weak, but it was happening. The attempt was happening. So immediate support is 1146, resistance 1216. If we break below 1094, this could be another short opportunity. Okay, let's go to SMH. We already kind of talked about this, but I review it. Slightly different setup. SMH has this evening star triple candle resistance pattern. Chips selling off. Very volatile. We actually touched the 236 level. And another way to think about this is if our trend line gets broken to the downside, that's not good. Pivot point, we're right at the pivot point for the daily. That's why it's a very important make or break level. If we sell off more, the next major level of support is down here at 532, 530 range. There were also warning signs on SMH, overbought. Weekly chart, not good. So it remains to be seen. It's going to be an intraday play if there's going to be a bounce or not. It's like 15 minutes. There's already a little bit of squeeze action, but it's still in a downtrend. So this is what I want to caution people is that just because I see indicators like MACD or TTM squeeze or RSI, the trend overrides that. Lower low, lower high, lower low. So we could get a lower high, that's fine, but then we're technically still in a downtrend on SMH. Short term. DRAM. DRAM also capitulated for 3 days down to the 55.34 pivot point. We lost that 20 EMA on the weekly, or excuse me, on the daily. Weekly chart, bearish engulfing candle, 4 hours resting above the 100 EMA, finally reached 4 hour oversold. So that has not happened for about, for a 4 hour chart, that's the first time. Hourly oversold several weeks. But this time it's different because, yes, low RSI, but the price here hit the 200 EMA on the hourly and then reversed. This is our lower low, lower high. This is different. Head and shoulders below the 200 EMA. On this, I think what I'll do to make it simple is use an anchored VWAP from the beginning. It's kind of ironic that this ETF launched essentially the day of the rally. The AI rally started, continuation April to May. So pull up a anchored VWAP. Put on the start of the close. I use a 3 standard deviation. Usually it never goes to my third purple line up here. Right, lower band 1 and 2. So I'll just, or number 3 and 3. So I'll just use a 1 and 2 standard deviation. So we were actually way up here in the second deviation range. And then we're pulling back to VWAP, anchored VWAP, which is 52.26. If we lose that, then 42 and then 32. So DRAM is still, it's not completely game over for DRAM ETF. It's just the RSI is resetting. We're getting close to a level of support. The question is, and it's not up to me, will we bounce off that level of support, 52.38, in the next week? Or will institutions just keep selling off? It's the big question. And I'm spending a lot of time on this video because these are the most important ETFs right now for AI. Let's go to crypto. Oh, it was a war zone here in total crypto market cap between the bears and the bulls traders. So a few days ago when I was making my live stream trading video, which I might just do occasionally when there are extreme moments or volatile moments or a very important chart setup, because this to me was important, this head and shoulders, which is why I sold my crypto here on this mini head and shoulders. So I played the swing up, took my profit, and I haven't even touched crypto. I touched crypto one time. I basically traded this bottom, and I'm considering actually doing another swing trade. Why? Because this is the first time we've been oversold on crypto since February 2026. So if this is going to repeat happen again, there could be a 10 to 20% opportunity on Bitcoin. This is not financial advice. This is just what I might do. But I need to see on the daily chart, I need to see not the oscillators. I don't need this down here. I need to see the price actually do something that's good, which means flag sideways, consolidate sideways, double bottom, upside down head and shoulders, V-shape, higher high, higher low recovery, or consolidate into a triangle and then break to the upside. So just from experience, I know I can scale in. People could have thought that for 5 days. They think, oh, I could scale in. But remember what I was saying a few days ago, that if the stock market crashes, most likely Bitcoin's going to crash. That's what happened. So 2 times that target. Did Bitcoin crash 20% down from here? Close enough, almost. It went 19 to 16%. So I think that the relative trading bottom of the algorithms for Bitcoin is relatively close. Let's actually go to Bitcoin chart. Like I'm saying, Bitcoin is oversold, but I like to buy not the first left side the oversold. I need to reverse. So I need to buy the middle. I need to buy the right side of the RSI, meaning don't buy the entry into the RSI, buy the exit of the RSI, meaning the right side momentum move. Also, just for confirmation, I need to see a little bit more MACD histogram and TTM squeeze histogram for me to get back in here. With all that being said, if I keep it simple, no indicators on Bitcoin, and we take the 2022 November low of 16,511 up to the October 2025 high of Bitcoin, 126,000, we're getting close to that 618. And if I open up a Bollinger Band, because we just crashed on a weekly chart, it's tapping right at the bottom. $60,000 was the bottom. If it crashes more, if we go to 40,000, anywhere between 50,000 and 40,000, I'm going to buy that as a swing trade, because that's extreme. That is extreme for Bitcoin. If it goes 25,000, 100% I'm buying Bitcoin at that spot for me. Not financial advice. So on a daily chart, let's bring up my friendly anchored VWAP from the all-time high. And we see we went from standard deviation, second low, to a VWAP recovery, which has happened before the second time. So if this is the pattern and we're going to lower low again, we should go to $50,000 Bitcoin. However, I think if stocks rebound, because, for example, SMH and DRAM ETF are sitting right on top of their pivot points, we could get a little retest up to 67 or maybe in 70,000, and then maybe try to go down to 50,000. So that's why I'm just staying open. I don't have a too large of a position on right now, so I can just ignore it. I can sleep at night. I'm not over leveraging. And just another reason why you don't hear me talk about over leveraged setups or leveraging here is in the USA, under certain, I'm just going to say most retail accounts have no leverage or very small amounts of leverage. Maybe we could do 1 times, 2 times, 3 times leverage, but anything higher than 5 times to 100 times is not legally allowed in America for crypto exchange law reasons. So that's why you never hear me trading Hyperliquid or Binance anymore, because Binance, all the USA customers in 2019 got transferred out of there. So that's why you might sometimes hear me say I'm doing like a leverage 2x, 3x. So I might be actually trading a Bitcoin ETF. Or futures is where there's leverage in crypto. But even for futures, I'm not getting 50 or 100 times leverage like people in Asia or Europe can get. So that's why you never hear me do that. So for me, I'm forced to do a just regular one times spot swing trading or investing strategy, which still works. Which still works because one of the great crypto plays that I had and other YouTube viewers and subscribers on this channel had is we played Solana. It was wonderful. 3 years ago, almost 3 years ago, we played Solana from 25 to 200 and 250 and 129 and 250. It was great. But you don't hear me talk about Solana because it's in a massive downtrend since September 2025. That's why I'm not telling people to buy. I will tell people to buy, or I'll tell myself to buy when the setup occurs. And sometimes it requires waiting 1, 2, 3, 4 years for that to happen. But the reward for that waiting is potentially 100, 200, 500, 1000% in crypto. If crypto survives. Previously, in 2021 to 2023 crash, remember that's 2 years essentially. Solana crashed negative 96%. That's what we need on crypto. If any major top 10 crypto goes 95% discount, that is 100% auto buy for me. Just from the research I know. You get 95% off a crypto, a top 10, top 20 altcoin, that's an automatic buy. And then just hold that for 5 years. That's a secret. Or 2 years now, one or 2 years. That's a secret. And if I get a 10 bagger, just sell that. 10x, just sell that. So for Solana, where are we right now? We're at approximately 75% off, which is okay. I could buy some, but because we just crashed, pulled back, the next level I want to see could be $30 Solana or cheaper. If it goes $10 Solana, $20 Solana, most likely I'll buy some there. But it's not just the price. It is what made us so successful 3 years ago in crypto is we had prolonged consolidation sideways. Is that happening right now? The charts are telling us no. Is there a golden cross? No, there is not. There's a death cross that printed on November 2025, which is a closing signal. The only thing good with Solana right now is we are oversold on daily charts. Weekly charts is barely tapping that. I still believe we're going to go up, but we have to go down first before we can go up in the price of cryptos. And aggressive swing traders like myself, I might scale in a little bit. Conservative is if we're downtrending, no long setup. That's the conservative strategy. Only go long when there's a long setup, meaning there's a golden up cross and an uptrend. Then there's slightly less gains to that, but it's more not guaranteed, but there's greater than 50% chance that there could be like a 10 or 20% move to the upside. Right now, in this downtrend, there's a greater percent chance that we're going to go down. So it's not all about the oscillator, except for this is a daily chart. So that's why I'm leaving myself half-minded open to that maybe we're going to get some green in this market. If I'm just patient enough, the next kind of capitulation crash might be my entry. But I might scale in just a little bit just because, okay, we have not gotten 20 RSI and XRP for 4 months or for a year. So maybe I'll buy a little bit. Tron approaching 200 EMA. Everything else in a raging death cross, but Tron was in an up cross trying to hit its 200 EMA. So I might play Tron actually because it's the only one that was in an up cross. Doge, Cardano. Okay, so here's Zcash head and shoulders. 30% to downside. We hit that target. The downside. It's not oversold, but it's a 200 EMA. Spot, HZen, Death Cross. So here's a good example. So if it's downtrending right now in Horizon, death cross downtrending. But you might be wondering, wait a second, this RSI is oversold. Which one do I listen to? I listen to the trend, not the oscillators. Oscillators are just derived from the price. What I'm going to listen to is the price and the trend. So I will not re-enter into HZen unless it goes very extreme, very fast. Like if it flash crashes down to $3 or $2, that could be a very instant, very fast swing trade. The only thing I'm looking for is where's the prolonged W, price consolidation, upside down head and shoulders for the reversal. Or if I'm just patient, wait for an up cross and then play a pullback or a breakout, meaning back here, which I remember telling people that I was doing this, is October 2025 when I saw this golden cross say, hey, wait a second, there's something here. And if I was just patient for 1 or 2 months, actually just 1 month of patience only, and that's 50% potential gain. Same thing here in the beginning of 2026, upside down head and shoulders. I played this, I remember. I think I didn't make 50%. I think I made like 25 or 30% because I was just waiting for this. And then I trail stopped it. That was a good trade. And then I haven't touched HZen at all. So that's why just waiting for a setup, sometimes it takes 1 or 2 years, 1 or 2 months on crypto. But if I give up or I blow up an account fictitiously, if somebody blows up their account and they can't trade anymore, or if somebody quits the market too long, without some kind of risk, there's no reward. Without discipline, there's no reward. So that's all I'm trying to say. And I'm spending a lot of time on this is because I've been through this cycle so many times since I started, is that let's go to end with this, end with QQQ. No, let's end with XOK. I've seen this so many times. Regardless of what the ticker symbol is, whether it's a stock or a crypto on a weekly chart, when any asset runs up in price too fast, too high, too fast, price is going up, and the price is in the sky, more than 50% chance it will crash and pull back hard. At least a pullback. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of nonstop green in the market. Every week, tech stocks and AI stocks going up for 2.5 months is not normal. It's not natural. So retracement was bound to happen. And that's why you did not hear me really tell people that much to buy up in this zone. I actually said it on stream video. I am not buying in this zone. I want to buy down here or down here. I don't want to be buying relative tops. It's probably a good spot to end. Thank you for watching. Thank you for listening. If you like this video, consider clicking subscribe, like, share this video with your friends. Let's manage our risk and emotions. And sometimes when there's no setup in the market, sometimes the best thing to do is just either close my positions or set a stop losses, turn the computer off, and just walk away for a while. Hope you have a nice weekend, and I'll see you next time.